joining us today for this Capron Asia EPAM session on readiness of legacy systems for open banking in APAC. My name is Joe Jelinek and I will be your moderator today. Just before we get started, we've got some general housekeeping. We'll be taking questions throughout the session today and we'll try to get to as many of those as we can. Please use the Q&A functionality within the platform to ask your questions. We have a great lineup of panelists today, so without further ado, I will let them introduce themselves. So maybe Lito, let's maybe start with you if you'd like to introduce yourself, and we'll just go through the panelists to let them introduce themselves.
Thank you, Joe, and good day to everyone. I'm Lito Villanueva. I'm the Executive Vice President and Chief Innovation and Inclusion Officer of RCBC. Thank you.
Thank you. Erica, let's get to you next.
Thanks for that, Joe. Hi, I'm Erica Dizon. I'm currently the head of the FinTech Business Group of Union Bank of the Philippines, as well as the head of the Open Finance and Digital Services Center of Excellence.
Great, thank you, Erica. Gavin?
Hi everyone, I'm Gavin. I'm the CEO and co-founder of a company called Brick, based out of Indonesia. We are an open finance platform for Indonesia, building local payments and data APIs for other technology companies.
Thank you. And Alistair?
Hi, everybody. My name is Alistair Brown. I'm the Global Head of Open Banking and Payments for EPAM. So I cover all of the subjects related to payments and how the open banking era has taken us from the Stone Age all the way through to modern times. There you go.
Fantastic. And Alistair, actually, look, let's just dive in. And so let's stick with you. Would you just, to give us all a bit of context, what is open banking and what are the drivers behind it?
So I think the original concept is European, as we all know. Going back to the year 2000, there was a group of European technocrats who headed down to Lisbon in order to figure out how to make the European Union economies less sclerotic and more dynamic. And that produced what became known as the SEPA framework, the Single Euro Payments Area. 28 countries involved at that point. This was before Brexit. And one of the main planks of that was the Payment Services Directive that got hold of the idea of introducing third parties into existing retail bank accounts. They weren't quite sure how to get hold of this, frankly. And one of the reasons we had PSD2 was that PSD1 did not cover everything, didn't protect the customer necessarily from fraudulent activities, amongst many other things. But PSD2 is a 300-page document. It's fairly complex. There's already a discussion around PSD3. Why? Because effectively it introduced not only the notion of open banking, but open finance and open data above all. And the problem there is who owns the data when there's an entire ecosystem at play, harvesting the data and putting it in maybe one or several places, at which point the rules around who owns the data and what they can do with that data are extremely imprecise. That's the European basis. Then, of course, we globalize the whole thing. And it's anybody's guess as to what happens next because it's not mandated in most non-European countries. So that's the backdrop as I see it. And that's why this is such an interesting conversation because, of course, it's open to interpretation and it's up for grabs across the entirety of the region that is APAC.
Yes, and thank you very much, Alistair. And let's bring the spotlight now to APAC. And Lito, I'd like to come to you next. How does RCBC see the open banking opportunity in the Philippines? Oh, you're on mute, Lito. Sorry, Lito, you're on mute.
Yeah, sorry. Okay, to answer your question, this is not just an opportunity for RCBC, but for all the supervised financial institutions of the Bangko Sentral ng Pilipinas. Because at the end of the day, it is not just about one bank or two banks or other wallets, for example, or some of the players in the industry to participate in the open banking or open finance ecosystem. Because the whole idea is for everybody to be part of it, right? So for us, for RCBC, we're one of the pilot participants for open finance or open banking because, as you know, BSP has been one of the very dynamic and progressive regulators in the world, having come up with an open finance regulatory framework in 2020. And this is something of value for everyone because, of course, as what Alster said a while ago, this has been a discussion for quite a number of years already, coming from the PSD21, PSD2, PSD2 uh, uh, 2.0 version, right? And in fact, we are already talking about having to also learn from some best practices other than that, specifically the one in Australia. So, in fact, right now, just to tell you, we are progressing quite very well with the, we call it OFOC TG, or the Open Finance Oversight Committee Transition Group, that is comprised of representatives from various sectors, no? That would definitely formulate some standards that would have to be agreed upon by these participants. So hopefully, within the mid part of 2023, we'll be able to see some of the 3 identified use cases to be tested.
Thank you very much, Lito. And it's interesting to see what RCPC is doing and indeed what the Philippines is doing. Erica, I'd like to come to you next. How does Union Bank look at the opportunity? Do you guys see it in the same way as Lito has outlined it? I mean, what's maybe different from your perspective?
Sure. I would agree with Lito in the sense that it's not just about one bank or two banks. Definitely right. It has to be an entire ecosystem. Otherwise, open banking and open finance won't work, right? If there's less players and not a lot of people or not everyone is involved, definitely there's less strength and less robustness in terms of the data and in terms of the strength of the open proposition of open finance, right? And what it brings. Now, in terms of the opportunity, how Union Bank sees it, on our end, right, it's definitely an ecosystem play. And that's how we want to see open finance and open banking, right? In terms of the opportunity that we see with it, for us in our minds, actually, it's the road for us to unlock the digital economy in the Philippines. And actually, we predict that the digital economy will bring around 2 trillion in pesos for the Philippines within the next 3 to 5 years if we're able to send services to the consumers and the customers that we serve. And of course, bringing more products and services as well as unlocking the 5 trillion pesos that will help the country as a whole in terms of GDP. Now, in terms of what Union Bank has been doing, we see it a little bit differently. Yes, we're also part of moving forward the Open Finance Oversight Committee with the Philippine Central Bank, which is BSP. But I think in terms of how we want to deal with it, we already have existing bilateral engagements with various fintech and bank partners that are already living up to what open banking is. I think not a lot of people really understand, right, that they are actually using open banking facilities. And as to date, we've already had 40 bilateral arrangements with different partners and different banks. And it runs across various services, right? It could be account opening, it could be account linking so that you could pay another wallet using a Union Bank account. It's also about opening a credit card or getting a financial loan. So all of those things are actually happening already today. Union Bank sees it definitely as an ecosystem play, but we're excited to see more and how the BSP is going to take this forward, right? I think for them, really, it's seeing that open finance is working and it's seeing that there are various possibilities and a lot of benefits, not just for the players as a whole, but the country as a whole.
Yeah, I think that's a great point, Erica. I think it's this whole idea of what open banking can do for emerging markets where we have large underbanked populations. I think the opportunity is enormous, especially in a region like Asia. Gavin, I think let's now jump to Indonesia. I mean, how do you see the open banking opportunity in Indonesia? Do you feel it's different? Or do you think it's similar to that in the Philippines? What's your take?
Yeah, thanks, Joe. I definitely think that the opportunity in Indonesia and in Philippines are both very large in terms of open banking and both very similar, right? In my view, open banking has most impact and most opportunity when three key ingredients are present. Right? Firstly, if there's a huge fragmentation in financial services, whether in mainstream or alternative financial services, that is where open banking can play a big role. So think about a landscape where consumer data is fragmented across thousands of banks, e-wallets, e-commerce companies, investments accounts. That is where open banking can drive huge value versus a landscape where most of consumers' data are only fragmented across 3 or 4 major banks. Right? The second ingredient that's very important is a huge unbanked and underbanked market. That is where open banking can help drive a lot of value by delivering financial services to a segment that was previously too expensive or too difficult to reach. And the third ingredient that I think is super important is a huge, or at least a growing demand from consumers and technology apps for open banking solutions. Right? There must be some level of market education. There must be some level of market pull in terms of market demand from the stakeholders in the market. And why I highlight all these three ingredients is because I think that these three ingredients are equally present, whether are we talking about Indonesia or Philippines, where there's huge fragmentation across e-wallets, fintech apps, banks. There's a huge unbanked, underbanked population, up to 75% of the population. Right? So yeah, that's what I think the opportunity is there, whether we are talking about Philippines or Indonesia.
Yeah. Yeah, and I'm always very interested in a country like Indonesia with such a large population. I think honestly, the opportunity there is immense for open banking. I mean, Lito, look, maybe let's come to you next. When we look at open banking in the Philippines, how supportive do you think the regulators have been in facilitating open banking in the Philippines?
Very much. The scale of 1 to 10, 10 being the highest, number 10 would be the rating. So, and in fact, they have been the, as I've said, the Philippine banking and fintech industry has been very lucky with the BSP being so supportive when it comes to innovations, right? So I think to answer your question, I mean, there's no doubt that what BSP wants is really on how to level the playing field. Open finance or open banking is not just about the big players. It is about everyone in the ecosystem, regardless whether you are a microfinance institution, a rural bank, an MSB, or any other low or small player in the industry. Because at the end of the day, you deal with customers, you deal with financial services, you actually extend services to potentially onboarding unbanked or underserved Filipinos. So again, it is a whole of nation approach in terms of having to at least be able to fulfill the goals of the national government, of course, together with all the stakeholders.
Yeah, yeah, and I do. We've written this report with EPAM on open banking, and I was actually very impressed about just how supportive the regulators in the Philippines have been and the initiatives that have been launched. I think it's probably fair to say that the Philippines was slightly late to the party, but I think they've certainly been making up for it. I mean, would you say that's true, Lito?
Well, yes. They may be quite late if you are to compare that with the other, other markets, right? Especially for developing markets. But if you're to compare that with developed markets, but if you are to compare Philippines with its peer developing markets, I think we are in a way ahead of everyone, because I think there are developing markets that are still in the stages of having to come up with their own regulation, embracing open finance or open banking. But in the case of the Philippines, we already have it. But in most markets, it is actually spearheaded or being led by the likes of the national competition or anti-competition commission, right? But because that is something that would practically cover all industries in a particular market. But in the Philippines, it is actually the BSP, leading the pack. I mean, leading this initiative or leading this initiative. But the thing is that it has to be. It is, open finance is not something just limited to banking, right? It is also beyond banking. That's why you have to include other sectors, other segments, other industries if you are to come up with an honest to goodness open banking or open finance ecosystem.
Yeah, no, I think you make some really great points there, and I think the strides the Philippines have been taking has been enormous, and I think, as you say, we have to look at the wider picture there, which is open finance. Erica, maybe we come to you next. What impediments do you think remain still in preventing greater open banking uptake in the Philippines?
I think there's four things that seem to be impediments to open finance and open banking, right? I guess a good example would be how they did it in the UK, wherein their central bank required all the players to be part of the open finance framework. I guess the BSP is taking a different approach. They're doing a test and learn approach, and they've opened a sandbox, right? So that players could test in a safe environment and launch digitally enabled products while still safekeeping the security of the consumers. So that is a main difference. And maybe it could be one reason or one rationale for open finance in the country not to get as widely adopted as fast as possible. That's one thing, but that doesn't go to say that the BSP definitely is trying and they're looking after, right, the consumers at the end of the day. Second, aside from having a strengthened framework already in place, since we're still in a test and learn environment, I think secondly, what's important and an impediment right now is the current infrastructure, right? So the underlying infrastructure of open finance are open APIs and that particular architecture. Not all the players are ready for that. So that's one thing that we have to consider, right? So each institution across the value chain has to be ready in that aspect, and they're not. So I think infrastructure is another impediment that we have to think of. Third, I think Gavin mentioned it earlier. It's really about educating the market, right, and our consumers about what open finance is, why is it beneficial, and why is it important. So if the widespread market don't understand what it stands for and what it could do for them, then we think adoption won't be as fast as we hope it would be. And finally, in terms of, I think there's some sort of holdback, right? Or in terms of other big incumbent players as to joining in on the open finance movement. So definitely there will always be pushback on their end because they are the biggest. So there's not much of an incentive for them really to push forward and to be open to open finance. And so there's friction on their end. And definitely, as we've mentioned earlier, open finance won't work if some players still remain in a closed environment.
Yeah. No, Erica, that's great. I think that last point is something I've seen as well for other markets, even and certainly in the developed markets, more mature markets, where a lot of those incumbents are, maybe don't see the value and so very hesitant to get on board.
If I may, Joe, one of the reasons it worked in the EU is because it was mandated. So it was an absolute obligation, as Erica rightly points out. So the so-called CMA 9 with the 9 key banks and building societies that were selected by the OBIE and the Bank of England, they had to get into this game. So it forced the pace because clearly if an incumbent bank is already up to its neck in other regulatory challenges and so on, why would it move? Why would they move? Now we've got this thing moving, of course, everybody can see the benefit. But overall, financial inclusion as the main overall target is a fantastic one because there are approximately 2 billion people on the face of the planet who don't have access to financial services instruments. And the idea of breaking through that, opening it up and making it all possible is a fantastic objective.
Yeah, I think those are great points, Alistair. Gavin, maybe let's come to you now. Look at Indonesia. Have the regulators been supportive in Indonesia, do you think? And maybe another sort of part of the question is, or flip side is, what makes open? Sorry, there's some background noise there. I don't know if anyone. Okay, yeah. So sorry, Gavin. So yeah, first of all, have the regulators been supportive? And then secondly, what makes open banking difficult, do you think, in a place like Indonesia?
Well, I, as an operator, I'm very happy with the progress and the speed at which Indonesian regulators have moved. I think as a whole, they are very supportive of open banking. And I would like to also acknowledge Lito's and Erica's point where I believe Filipino regulators were the first to release draft regulations for open banking. So they took a head start there. But I think over the last couple of years, the Indonesian regulators have done a lot to catch up. Right? So some examples, the Indonesian Central Bank, Bank Indonesia, released an open banking white paper in 2020 that sets out all the principles that stakeholders in the open banking ecosystem should abide by. And in 2022, there was a rollout of SNAP, which stands for the Standardized National API Standards. And the central bank has also required both bank and non-bank financial institutions to build towards these standards as they release their open banking API portals. These is the rollout of these APIs, these standardized APIs are done in batches. The first batch is done and the second batch will be announced in December this year. And more institutions will be onboarded as we go along. And also all these different initiatives that I just mentioned are all part of a blueprint and roadmap that the central bank has laid out for financial services up until 2025. So there are more things coming, right? And I would say for a 5-year program with that many things in there, not just open banking, but also other initiatives, that's a really fast speed for regulators, right? And to your other question, Joe, what makes open banking difficult for a place like Indonesia? I would really say the size of the country, as you, Joe, pointed out earlier. So the number of institutions here, the number of stakeholders whose concerns, whose viewpoints have to be taken into account as we roll out a new regulatory framework is not an easy task for sure. Right, we're looking at 200 national banks in Indonesia. We've got another 1,008 rural banks. We've got so many other alternative financial institutions. So the size is I think what everybody and especially the regulators are grappling.
Joe, I have just one comment.
Yes, please. Please do.
Yes, thank you. This is about comment about what Alistair said a while ago. While we understand that in UK that it has been a mandate, right? So I think it's a toss up between having to have that voluntary buy-in versus mandating it, right? So I think in the Philippine context, what we have seen thus far, if we are to look into the national digital payment system that was started way back 2017. I was part of the technical working group as early as that was initiated under Deputy Governor and eventually became Governor Nestor Espinilla. It was really more about having to ensure that all stakeholders, I mean, meaning the big banks, the small banks, the rural banks, the big banks, and even fintech players should be on the same page as everyone, right? So you have to have that buy-in, right? So, but you saw the resistance of some of the bigger banks, right? Because the ultimate question would always be, why would I need interoperable payments? Because I have I command I have the biggest market share anyway. So, et cetera, right? But it came to a point where it has to be mandated, right? So, because it was, when you say it has to be mandated, because it was contained in a regulatory circular. So therefore, everyone must conform with that regulation as part of their compliance. So that interoperable payments was actually, where we now have that InstaPay and PesoNet as the, as the outcomes of those of that initiative on national digital payment system. It took a while from 2017 up to 2019 from the time that it was actually officially launched, right? But that's why I'm saying this, because this will definitely happen as well in open finance in the Philippines. While you have the OFOC PG, that where all of these stakeholders, I mean, represented by all of these sectors, are actually in one table discussing about, the top three use cases that we intend to push. And of course, we are actually listening to quite a number of potential issues, concerns. I mean, of course, number one concern has always been potential customer poaching, potential revenue loss, business viability. What is it for us that I will be getting out of this initiative? So these questions are actually being answered, right? So, and eventually along the way, we will be able to see that at the end of the day, all of these, players would have to conform and have to join and be part of the open finance framework.
Thank you, Nito. So you think that it will at some point become mandated in some ways in the Philippines? Is that what you're saying?
Yes. That's my prognosis.
Interesting.
Ask from Lito. We'll wait on that, Lito. Let's jointly push the BSP.
Yeah.
Alistair, look, we've been talking about the opportunity, the open banking opportunity, and we've started to touch upon maybe some of this pushback and hesitation from incumbents in adopting open banking. Why do you think there has been this sort of pushback and hesitation?
Well, I think we've covered a lot of it insofar as if the incumbents are already in a position of strength, why would they? Because it's further complexity. But to Erica's original point, this is an ecosystem play. And if we're all in it together and pushing forward, this is a matter of the whole system evolving. But making that a coherent undertaking is hugely difficult because organizations are at different levels of maturity and they have different ambitions. Making that coherent is an extremely difficult thing to achieve. Coming back to APIs, one of the original concepts within PSD2 was the formulation of a set of APIs that will be respected and used by all players. So that's a kind of glue that brings them all together. And they were known as the Berlin group of APIs. And we had a lot of the technologists within my company and my group that mastered them specifically because we saw that as a way forward. But then suddenly there was competition between organizations to modify the APIs, not use them, displace them, optimize them, etc. So suddenly there was a sort of second wave game around the pure technology at the center of this thing, which meant that instead of standardization, which is one of the main objectives here, we had further fragmentation. And as Gavin said, that's one of the main reasons this comes about in the first place. But trying to get hold of it and in some way consolidate that fragmentation is even more difficult because it's just another competitive playing field.
Yeah, Alistair, thank you very much for that. Actually, I think that's a very interesting point you make as well. And this whole idea around whether or not we should standardize APIs. Would anyone else like to comment on that? Whether we should have standard APIs, whether that is that really what we want? Would that be restrictive, or should there be other perhaps frameworks that maybe aren't so rigid, but nevertheless do introduce some sort of standardization? I don't know. Does anyone else have an opinion on this?
I think, Joe, the very essence of open banking, open finance is really having to have that standards, right? It is just like, it's just similar to having that Bluetooth, image, right? Or wherein practically anyone or any player could just connect and seamlessly, right? So that should be the essence of open banking, open finance. So it's really about standards.
Yeah. And either Erica or Gavin, would you guys like to say something about this?
Yeah, I'm happy to chime in here. I think standardized standards are really just a start, but there's a lot more work to be done. So I can give a very practical example. We have standardized standards in the UK, Europe, and also in Australia through the CDR regime, right? But yes, the banks might build towards that standard. But what about the quality of APIs? Do those APIs work? Do the response times of the APIs, are they up to mark? Right? In reality, what I'm hearing from a lot of the players, stakeholders on the ground is that some of these standardized APIs can be down for months, and the banks are not really investing resources into making sure that the quality of these APIs are high. Right? So and beyond that, there's even more to be done. So really, standardized API standards are only just the start.
Yeah, I agree with that. If I may, there's been an over proliferation of APIs with some of the leading tier one banks in Europe. And so there's now a second wave of activity whereby there's an optimization, a reduction of the numbers, because instead of having 357, it turns out they only need 14 or 15. Again, it's about quality. You're absolutely right. If they're the right ones in the right way, you don't need the other 200 or so. So there's a whole game here of it is experimental to some extent, yes, and what works in one country won't necessarily work so perfectly in another. So we have to be careful here. But yeah, there's been this over excitement around APIs generally, and I think if we look at the quality of it, then we're heading in the right direction.
Yeah. Sorry.
Yeah, I just want to chime in that. Okay, maybe just to put together everyone's responses, right? I agree. Standardized APIs is necessary, as Lito mentioned, but I really agree that it should be just the beginning, right? It's standardized so that more of the ecosystem players can get in and participate. But coming from a product standpoint, because essentially it is still a product, right? It still needs to evolve. For sure. And that brings along with it the types of APIs as well as the quality of the APIs for sure. Because if we have a lot of downtimes and we don't do anything to fix that, then more players wouldn't be, on what open finance is because the experience is so bad. Right. And so even from our end, you need to test it and then learn from it. And I think that's what open finance is, right? Otherwise, if we're not open to changes and to upgrades, then it defeats the whole principle of what open really means.
Yeah. I think that's a great point, Erica. And look, maybe we just change gears a little bit now, and let's start to think about maybe legacy and what that means, and how that's perhaps impeding the opportunity. So, Gavin, if I may come back to you there, I know you've done a lot of work with incumbent banks. How do you see legacy impeding them from benefiting from the open banking opportunity?
Yeah, when somebody asks me about legacy, I think most people would be thinking about technological legacy. So what's often said in the space is that many core banking systems at many banks are more than 40 years old and still being coded on COBOL, which is a legacy programming language that hinders the development of open banking solutions on a technological level. But I think that's something that can be overcome. There are many players working on solutions for technological legacy issues. I actually think that the much bigger problem is business model legacy. So, and that's the much bigger issue. I would say most banks, especially in the APAC region, are still very focused on a branch banking, full stack banking business model versus a platform banking model where they are really providing, they're the core compliance, they provide the core compliance layer, infrastructure, and they have a lot of willingness to partner other technology companies and allow them to build on top of that great banking infrastructure that banks are good at. Right? So, and this ties in a lot into what Lito and Erica were saying earlier, that there's a need to move beyond banking to really build an ecosystem in that open banking framework in a particular country, right? So I think the bigger thing to overcome is really all these legacy departments or business units in especially the bigger banks who are sitting on great revenues, great cash flow, they also need to do their part, be willing to sometimes kill that current golden cow or cash cow and move towards a new model that might be a lot more profitable, might be a lot more lasting for banks going forward.
Yeah, no, Gavin, I think that's a fascinating point. Distinguishing between technical legacy and business model legacy. And I think certainly, I know on the business model side that's often overlooked. So thank you for bringing that up. Alistair, coming to you next. Look, I mean, I know this is your bread and butter. Obviously, this is what you do. So from that global perspective that you've got, what would you say were the common issues for banks in terms of tackling their legacy?
So EPAM is a technology firm, and nearly all of our 62,000 employees are technologists. So I take Gavin's point. He's absolutely bang right. Companies like us tend to obsess about the technological legacy stack and COBOL being ever present and so on. And where are the COBOL programmers? Because they're all dead, basically. So having to reinvent companies to rediscover COBOL just to keep the lights on. Putting that to one side, because you're absolutely right. This is about business models rather than anything else. If you look at loyalty of one's customer base, how do you retain that loyalty? It's by offering them stuff that's more appropriate to their actual needs. We don't yet know that customer base as well as we ought to, considering that they've been knocking around in the same incumbent banks for decades in many cases. We're still not addressing their real needs. And the missing piece here is data. If we've got more mature, richer data, because we're harvesting better data, because we're providing it, we're getting hold of it in a better way because of open finance, then we can actually start selling them stuff that they really do need, rather than just cross-selling mortgages into retail bank accounts and thinking we're fine, because that's very simple stuff. That's sort of 101. We need to move into something that's a lot more sophisticated, that identifies customer requirements in a much more precise way. And we can only do that by harvesting better data. So this thing is actually a massive set of opportunities. We can actually create better business models, better awareness of our customers because of this data sharing that we're all talking about. That's the way forward. That's very, very exciting.
Yeah, Alistair, thanks for that. And I mean, you're absolutely right. Data is obviously critical. And then once you're able to harvest that, what you can do with the data, I think is I mean, it's just endless. And as you say, I mean, I think the opportunity is vast. Lito, look, maybe we could come to you next. I know in our previous discussions that RCBC has invested a lot in its open banking architecture. Could you talk us through how you were able to overcome the legacy challenge to meet the opportunity in terms of what did you do and what's been the outcome?
Practically there may be a caveat to open finance, just like any other industry developments. The hesitancy may stem from the worries of potential, as I've said earlier, about potential customer poaching, loss of potential revenues, customer disruption, and overall viability. But in today's world, I think it is now a common understanding that success does not stem from isolating yourselves and closing the system, because we thrive because we foster collaboration. So in the case of RCBC, that has been very clear at the outset that we have to collaborate with with practically all players in the industry, because if you are to look at the fintech landscape, we have quite we have a an ocean of opportunities when it comes to quite a number of fintech platforms available for tapping, right, or for collaboration. So I think this is something of value for for RCBC, because it is already a win-win situation, especially for legacy banks. Because, for example, RCBC has been in existence for the past 62 years, and the name of the game right now is really not to establish or build your own tech dev team in hundreds or thousands of employees, but practically having to do it smartly by way of having to collaborate with practically all players, right? and be able to come up with with initiatives or with products and services in a matter of days. So it's not about having to launch a product in before after 6 months or even years. No? So I think it's a matter of how you put your money where your mouth is in terms of having to really push for digital transformation. It is not just technology per se, but it's also about mindset. It is about culture, about having to have every employee in the organization to be the chief innovation officer as well. I may have the title of the chief innovation inclusion officer of the bank, but the mindset really is how we can enable or how we can empower every member of the organization, about 6,700 strong men and women of RCBC, to be a chief innovation officer as well.
But thank you, Nita. I think that paints a really nice picture. That sort of whole of organisation change that needs to happen. And I mean, Erica, look, I know that Union Bank has similarly committed to open banking ecosystems. What approach did the bank take to enable you to do this? What did you do, and what was the outcome?
Sure. So Union Bank wants to banner, I think, or spearhead open finance in terms of the financial institutions here in the Philippines. But definitely, with the ecosystem play, we're always open to working with Lito and RCBC. But in terms of like what we exactly try to do, right, in terms of pushing forward open finance within the organization, I think it really started as well. You were mentioning legacy systems earlier. What Union Bank did was to do a hybrid approach, and it took 3 steps for us. Number one, obviously, it was migrating or upskilling, so to speak, our existing legacy systems. Side by side with that is implementing a new platform, right, with open architecture, open API architecture. And in fact, that has worked well for us because we're able to still cover our existing consumers and clients while onboarding new ones with new business models, as what Gavin has mentioned earlier. I mentioned a 3-pronged approach because while we maintain the legacy systems and upskill it, and have started a new platform as well with open APIs and open architecture, we also have the third approach, right, which is competition. We've said that multiple times. And so we work with a lot of fintechs, digital banks, and not just fintechs per se, right? Because we see in the Philippine landscape, it's not just about financial technology anymore. We see insurtechs, we see wealth tech, we see prop tech even. So it's a wide landscape of operating with all of those players, and not just in the financial space anymore as we slowly prep up for an open economy.
Great. Thank you so much, Erica. And yes, I like this idea of an open economy. And maybe if we look towards the future now, and Gavin, coming to you, how do you see the future of open banking in APAC, and what do you see BRIC's role within it?
The future of open banking in APAC. Wow, huge question. Well, I definitely would love if regulators would all move a lot faster in terms of setting regulations and standards to aid the adoption of open banking. Maybe I can share a bit about what I think will be important for open banking to be a success in APAC, right? I really think it's this top few things. One, world-class infrastructure. So that means we need to have clear standards, clear guidelines on how stakeholders would interact with each other. We also need to have clear governing rules to govern how partnerships and compliance in the open banking space will work. And lastly, but perhaps the most important point, we really need adoption for open banking solutions. So again, I would hammer home on the point of market education. People need to use it. People need to know what is it about, what's the value that they can get out of it. And I would say BRIC's role is helping build towards these 3 important infrastructure pieces that I just mentioned across APAC.
Fantastic. Thank you very much, Gavin. And Lito, how do you think open banking is going to evolve, and how will RCBC be positioned to be at the forefront of this evolution?
Okay. Well, for me, open banking might emerge as a practice that will include not only financial information and credit profiles of our consumers, no, but it might also possibly adopt health trends and outcomes of consumers. And practically, you can think of a lot of things, and we are. I would say that we are in a way limiting ourselves with how we just define open banking or open finance currently, because as I've said, we have yet to unlock the huge potentials or opportunities that open finance or open banking might be able to unleash for the benefit of unbanked or underserved Filipinos. And I think this is very important for financial institutions to develop the best financial packages, no, such as maybe insurance or investments for their to serve the needs of their customers. And I think as financial inclusion moves from being a trend, no, to being a norm, open banking and the behaviors of banks or even fintechs toward open banking might shift toward understanding untapped and underserved markets. So, example, in the Philippines, the most unbanked include farmers, fisher folks, even rural Filipinos, no, living in geographically isolated and disadvantaged areas, including housewives or even household helpers. And these are critical nuances to these sectors that are valuable in creating approaches and developing products that solve their problems. That could be delivered to better the quality of lives for these consumers. And I think, lastly, open banking continues to be ahead of the game. So again, as what our friends here would say, we are just at the starting line, right? So we're not yet there, right? So we're just starting the game. So I think this is evident in our thoughtful and revolutionary development of services that target unbanked and underserved sectors. And of course, this was achieved through access to data and understanding our potential market better. So as I've said, this is just we are just in our initial steps, no? And we will be able to still unleash the huge potential of open banking in the coming, in the coming months or years. So we're getting there. So hopefully very, very soon. Thank you.
Yes, thank you, Lito. Yes, certainly exciting times and all to play for. And Erica, look, as you stare into your crystal ball, and what will open banking look like, do you think, over the next sort of 5 to 10 years, and how will Union Bank look to meet this future?
So in my crystal ball, Joe, I think I've mentioned it, right? I think open banking will evolve into open finance, which is across the entire value chain of financial activities. And then it will evolve into open economy or open data. So I don't think it should be just isolated in financial aspects of a person's life. I think slowly, and even we see it now, right? It creeps into the other activities of a person daily. And that's what we call open economy. And I think since we already see it now, it's not far off that definitely it's going to be a reality for us in 5 to 10 years. So when I say open economy, banking and finance per se will be embedded in these day-to-day activities. It will start to become invisible. So when we say invisible banking, a lot of people ask me what it really means. And just to put it in layman's terms, right? It's really banking and finance that you don't feel, that you don't have to think about, because it's as easy as a click of a button. It's embedded in your daily activities. And of course, at the end of the day, right, what we're working for is it's inclusive for everyone. And in terms of what Union Bank's role in that is, I think, as I mentioned, we're trying to banner what open finance is so that people could start seeing the possibility of the future of what an open economy could be like for everyone. We understand that the bank doesn't need to be take a central role anymore. I think before banks used to have a central role in the value chain. That should no longer be the case because we are open to the fact that we can just be embedded in other systems and other platforms, and that's fine with us.
Fantastic. Thank you so much, Erica. That's very open-minded, which is good because it's open banking. Alistair, from EPAM's perspective, what do you think banks could be doing to prepare for this, open finance, open data world?
The negative side is that there's a huge risk of disintermediation, because embedded finance implies that other organizations that aren't originally and uniquely financial services providers can jump in and invent new ways of doing things. And if you look at the large retailers getting hold of the concept of embedded finance, what they're doing is effectively saying, okay, I may be a manufacturer of sports shoes, but what I'm going to do is occupy the entire payment channel set that enables the purchasing of our product, and make sure that we're in total control of that, again, to harvest the data about the way my customers are behaving and to optimize that buying experience. And they do that through the possession of the data that comes from the occupation of those payment channels. Where's the bank in all of that? Well, as distant as possible. Thank you very much. Maybe it's got a small element of involvement there. But suddenly these large organizations are taking control of more and more of that payment flow combination. And omni-channel interoperability is absolutely what it's all about if they're a global player. So suddenly there's a massive risk of disintermediation there. And this is something they're all fighting against. But one of the interesting pieces of evolution here is that the challenger banks that popped up as a result of the original Payment Services Directive, they've taken on the banks, but they have yet to become massively profitable in any meaningful way at all. And the reason for that is that the standard salaries of the people going to work day after day after day are still going into the incumbent banks. And that's the money that they can play with. And the challenger banks are not being able to attack that space. So interestingly, the opportunity for the incumbent banks to remain in control is equally strong. So we've got a battle on our hands altogether. But there's one other thing I'd like to mention, which is that the more openness we have, which is fantastic, it offers all these opportunities, but there's a massive risk as well, because for a hacker, it's an absolute field day. The opportunity to invade that space, to take the data, to steal identity, and so on and so on, it's huge. And there's a stat out there that if fraud was a world economy, it would be the world's 5th largest economy. But that's only the bit we can mention and measure, because there's a lot of other stuff we can't even see. So there's a big risk here as well. I think we should take it on, but I think there's a lot to play for.
Thank you very much, Alice.
No?
Yes, please.
That's actually a very good point raised by Alistair, because practically the concerns of incumbents in terms of having to really embrace open finance or open banking are practically those issues that were actually outlined by Alistair. I mean, potential fraud, potential intrusion into the security of the app or the sanctity of data, right? So because these are all valid concerns, right? Because you're practically opening up your defenses, in terms of having to share your data with the rest of the other players in the industry. So I mean, that's why I think those concerns by incumbents or those players in the industry are really valid and definitely have to be addressed as well, right? Because again, as I've said, I think we have seen the evolution and the actual execution, implementation, and seamless execution of open banking, open finance in developed markets, but we have not really seen a single developing market that has actually implemented seamlessly open banking or open finance. And I hope Philippines will be the first. Thank you.
Thank you. And look, we're down to our last few minutes. Erica or Gavin, do either of you want to add anything to what's just been said?
No, nothing for me. Lots of gold there. Nothing for me to add.
Okay. Erica, would you like a final word?
I think I'm good, Joe. I think I've said everything that I needed to say. Maybe just the fact that for sure it's just a beginning. I think the model will continue to evolve because I think it was said, right, like not everything or not the same framework that has worked in other countries will work in particularly for us. So it's a matter of how the players would adjust, because at the end of the day, look, every business model has its own set of problems and concerns, right? But what is important is the end result and what is the benefit to the greater population, to the businesses and to the players and the ecosystem that are a part of it. So while it evolves and we find solutions to the things that are not necessarily beneficial to open finance, my hope is that in the Philippines per se, we sort it out and we push forward to it.
Thank you very much, Erica. That's a lovely optimistic note to finish on, and we have run out of time. So I'd like to thank all my panelists today for such a really fascinating and interesting discussion. I'm sure it's one that we're going to be having for at least a few years into the future. So watch this space. We've gotten a lot of questions from the audience in the background. Unfortunately, we weren't able to get to all of them, but we certainly will email you later on if you've asked a question. So thank you all very much for joining as well. Thank you.